One.
The Bulls are going to focus on the Microsoft report. The Bears are going to focus on the Google report. Right now, the Bears have the edge. We'll talk about those earnings reports, much more, the ETF effect caused by that. We got a guest we haven't had on in a long time, Greg Weldon from Weldon Online, former floor trader. He's going to come on and give Dennis and Mitch some more fodder. It's Wednesday. It's going to be a wacky one. Let's get things started on
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Welcome, traders, investors, to this Wednesday's edition of Pre-Market Prep. We don't want to see snap. We want to see the S&P futures down 11 and a quarter handles. Couldn't spend much time above the close, and we couldn't take out yesterday's low. Down 10 and a half handles at 42.60.50. Buck having another good day, trying to clear the highs from the last few sessions. You take a look at the dollar chart. Bonds, down 6 seconds after a 3-day winning streak. You got to be happy about that. Crude up 28 cents at 84.03. Gold flat, 1986.10. Silver, a little bit weaker. That's down 17 cents at 22.94.5. And Bitcoin futures, they're up again, $530, 34,375. So Dennis, you must have had some fun in the after hours there.
Wild.
Does Microsoft always come out at like 4:01 and right away?
No, not always.
No?
They can sometimes be later, but they both hit bang bang. Microsoft, Google,
Yeah.
they hit within. I feel like within a minute of each other. It was really wild, and obviously, we got the big pop in the S&P on Microsoft. If you see, we rallied up 20 handles instantaneously. And that was great on, like you said, it came out of 401. And then Google came, I feel like it was like a minute later. And then what did they do? It was a minute later. And what do? They take Google down pretty much the same amount they're taking Microsoft up just to make up for the difference. So then the S&Ps are like, oh, we better turn around and start going down, which is exactly what they did. So, this market just finds it's very hard for two mega cap stocks the size of Microsoft and Google to both go up. So as soon as Microsoft blew it away, Google was going to have to do something special, and they really didn't. We're going to bring Money Mitch in here, and we'll obviously talk about the individual reports. It is earnings day. Money Mitch, if you're hiding in the background, please come in here as well. Yeah, Microsoft earnings, pretty good. Google earnings, they have fine reasons to sell it. And again, they weren't great because obviously some slowing growth in there. But if you want to jump into the details, we could tackle both these stocks together.
Let's get right to it. Let's go to the numbers here. And of course, it's going to be a lot based on the cloud numbers, but that's what I would say to pay attention in both reports, right? Microsoft's EPS here, $2.99, beats a $2.50 estimate. Sales of $56.52 billion, beat the $51.4 billion estimate. Microsoft said they saw Q2 intelligent cloud revenue at $25.1 billion to $25.4 billion. They said they see Q2 more personal computing revenues of 16.5 to 16.9. The intelligent cloud segment produced $24.26 billion in revenue, up 19% above the $23.49 billion consensus. Azure jumped about 29% during the quarter, higher than 26% consensus here. And just to mention, of course, OpenAI also now has 18,000 customers, up from 11,000 customers in July. So actually showing me some numbers there on AI, not much revenue, but at least customers joining there, right? Alphabet coming in here, Q3 EPS at $1.55, beats the $1.45 estimate. Sales of $76.69 billion, beat the $75.94 billion estimate. Their Google revenue services at 67.99 billion, beat the estimate there. Google advertising revenue beat estimates. YouTube ad revenues also beating estimates. Where they struggled, right? Google disappointed on Google Cloud revenues, which were at 8.41 billion and missed the estimate of 8.6 billion. Of course, this is, if you look at the year-over-year number, this isn't that bad, despite, of course, it was at 6.9 billion a year ago. So overall, everyone's saying that those Google Cloud numbers is really what was focused on. But I would also state, I mean, compared to a year ago, they're still gaining.
So much to digest there. Maybe we shouldn't have tackled these together, but I felt
Hey, you asked for it. You asked for
well,
it.
because the relationship is so strong, meaning that these are, you know, two of obviously the Magnificent Seven, two stocks that have held up the entire market. And I mean, Microsoft, to just start there, they were doing some really heavy lifting last night, Joel, because the stocks wanted to go down. And I mean, if you see the S&Ps, we did pop 20 handles on that initial Microsoft print. Then we were waiting patiently for the guidance. And, you know, I'm looking at the S&P trading red, and I'm like, what happens if Microsoft warns that we're going to really be red? Well, Microsoft actually guided higher, and you can see around just after 6 o'clock, the big spike up to
there you go.
$350. That was on the guidance. And then for whatever reason, they pulled the rug, brought it all the way down to like 338. So it was a wild candle on that guidance. And then it just kind of meandered and stayed in the same spot. So I think everything was pretty good with the Microsoft quarter, like very good. Again, it may be buyer exhaustion. I don't know what it is, why, you know, but again, the stock's holding up fairly well, 14 points. So you can't argue with Microsoft. It pulled a Netflix, kind of blew it away. Stock's up, should be up on those numbers. The concern here is really the S&P, and you can blame Google for it and say, well, Google knocked it back down. And that is the case. I mean, if Google would have not reported, I think the S&P would be higher. But, you know, you look under the hood here, and there's a lot of other damage in other sectors again here this morning. So tech in itself, despite the Microsoft huge beat, is taking the lead from Google. For whatever reason, this market is focusing on Google's not so great quarter instead of Microsoft.
Man, this is I think just you have to throw out the high and throw out the low in this, at least for right now. Getting over 350, you know, that was if you were able to catch that. Don't know if we're going to get there in the regular session. This number, we're pretty close to it. Right now, I'll use 345. There was one daily high in that area. It fills a gap also for from July 25th. So above that, as you can see, you know, on the dailies, it's pretty wide open. So I keep an eye on 345. And then on the downside here, and I'm being pretty tight after a big range, it looks like someone's been supporting the stock at like the 341.50 area. So if you lose that, or if the S&Ps, you know, start on a big downturn, I'd take a look at that. So it's messy. I mean, it consolidated before the report and had both a pop and drop. Google is, you know, the street was leaning the wrong way into the report. And here's the gap from the, from the last earnings report. And it hasn't got to 127 yet. So I think that's where your support is. And as far as resistance goes, I mean, it might be a while before you see the bottom of yesterday's range at 138.75.
They absolutely needed to blow it away because Google being only 10 points off its all-time high.
Yeah,
it's one of the most resilient stocks that we have in this market. There are very few stocks in this market that are within, 10% of their all-time high. And it's mainly the mega caps, and that's why the overall market is within 10%. I believe the S&P is still within 10% of its all-time high, close, if not, about 15% off. But Google just, it had to blow it away. And, they didn't, obviously in the numbers and the growth slowing a little bit, in certain areas there in the cloud revenue. So that's why the stock is trading down. But then let's move away from the two mega cap tech stocks here. And we go to the semis here, and Texas Instruments not helping us here either. TXN here, Money Mitch jumping over, just staying with the tech theme just for a minute. We know we got a lot of other reports here too, but I want to get the Texas Instruments report here and here as well.
All right, for Texas Instruments, GAAP EPS at $1.85, sales at $4.53 billion, missed the $4.57 billion estimate. They do see Q4 revenue at $3.93 billion to $4.27 billion versus a $4.49 billion estimate, and EPS at $1.35 to $1.57. Looks like it's getting hit hard, of course, because of that guidance missing the estimates.
Yeah, Texas Instruments guiding down on the revenue especially. They don't like to see that at all. And obviously the sales miss too, not good here. Stock is attractively valued. I mean, if you're looking in the chip sector here, dividend 3.77%. You don't get a lot of 3.77% dividends in the tech sector here. It's coming off. It's off 6%. It's a big move for TXN because it does have a lower beta than some of these other names. The issue I'm going to have is it's making not a new 52-week low. It's making a new 3-year low. So, and if you look at the longer term chart, you're like, oh my gosh, this is a serious breakdown in the chart here now. Do breakdowns fail? Sometimes. But again, Bear is in complete control. I'm not going to be a hero and say, you know, this is going to bounce right back.
Boy, look at this thing since the end of July. I mean, 190 and the street just pounding this thing. Street leading the right way into this one. I mean, maybe not in Google, but holy macro. Trading at the lows of the pre-market session. I'll give you a number, and one number only, as Dennis likes it. September of 2020, you had a low at 134.12. Or, yep, 134.12. So when I give you those levels, you know, it's already down $3. You know, it's not just a good number for today. Maybe it reaches that today, but man, going back to September 2020 levels, I guess people just aren't using their calculators anymore. I mean, unbelievable move.
Why would you need a calculator, Joel? You got AI.
AI taking them out. Don't need any more Texas Instruments.
Unless Texas Instrument comes out.
Do they
with
still make
TXN
those Texas Instruments calculators?
Yeah, they do.
They still make those?
Come on, man. For algebra, you need that thing, man. I still remember using it for algebra, making the graphs and stuff.
Oh, yeah.
They have the best calculators, that's for sure. I think we all know that. But like I'm saying, I mean, there's other things probably coming for their lunch, like AI things, right? I mean, if you can pull out your phone
and Texas Instruments
and do the same thing.
Businesses. Like we're joking as bit, you know, calculators.
No, but
I don't think are their main business anymore
though.
Here.
I mean, there's a lot of, you got to look inside, see what is going on here, because it definitely is taking a big hit, and it doesn't show me that something in the business here is looking good. It shows me that, and the chat said it here, they're not expected to grow for 2 to 3 years.
Yeah,
and,
you know,
and things like that.
Also,
I mean,
if I was long the stock, you know what, I think you got to be concerned about that dividend. I mean, they got to do something. I mean,
well, the dividend's pretty small relative, so I'm not totally concerned about the dividend. What I'm more concerned about, it's not like it's a 7 or 8% yielder. I don't think there's any concern with the Texas Instruments dividend. I think you're just seeing growth slow. Like, this is a semiconductor. I think it's showing that, you know, it's not all NVIDIA. I mean, NVIDIA is maybe eating everybody's lunch to a certain extent, but, you know, everybody thinks about that. But, I mean, Texas Instruments, it's not all just AI stories across the board in every semiconductor here. So I think that's what we need to, you know, when we're looking at Texas Instruments, we can't just say, yeah, semiconductors are all hot. It's not the case. There's a lot of different semiconductor stocks, and Texas Instruments maybe doesn't benefit as much as a lot of others do. Although probably, I bet you if I just go to their website, just curious if they put AI right on the front. When they're talking about robotic systems, I was just curious if it's like sprayed all over it. The chips is right on the front, robotic system. So they're talking about autonomous stuff here. It's right on the front page. So
also a good point here from Spillbuyer, who says that they're in the auto sector. You know, it could be that could be weighing it. He says, I don't know.
Oh, they got car chips.
Yeah.
I didn't know that either.
Yeah, so that's
and again, you know what I think of the automotives. If you've talked and listened to this show even for a week, you know what I think about the automotive industry, and I think we're going to have a really tough 2024 for auto.
Well,
Yeah, tough day for GM yesterday. I mean, they tried to take it green, but I mean, when you're not when you're not making cars, it's kind of hard to make money. And Ford just hanging out near the low of the moves. Stellantis, that's held up okay. I don't know why that popped up. For some reason, I
yeah,
think
I ignore
they're gonna
that
start.
move now.
Yeah.
It's illogical for it to stay up here like it
They're going to
has.
get a
But
deal. Eventually, they're going to get a deal. The stocks are going to pop on the deal, and I think it's going to be a fabulous selling opportunity. So I'm waiting for the deal. I think it's going to come here eventually to actually maybe initiate a short on these stocks.
Okay.
all right, let's move on to an area that you guys know how I feel. If you guys caught my video yesterday, let's go to Visa Financial Services. I've been calling the head and shoulders on Visa and MasterCard. This doesn't look good. It's starting to break through the neckline, the 230 area. Let's give their numbers here. Adjusted EPS of $2.33 beats the $2.24 estimate. Sales of $8.61 billion beat the $8.55 billion estimate. The Q4 payment volume was up 9% year over year. Processed transactions up 10%. They raised their dividend by 15.6% to 52 cents and announced a $25 billion buyback.
Wow.
They're trying their best to keep investors in here, but I think maybe somebody knows something because that is an ugly looking head and shoulders here.
They're printing money still. These companies just print money. I mean, I had MasterCard. It was probably my best long-term investment ever. You know, I've told the story before. My average cost basis was $11, and I sold it a year and a half ago. Well over $300 for the simple reason that I just didn't like it at 30 times earnings. I mean, I was selling everything that was 30 times earnings. It's still trading currently 36 times earnings, the MasterCard. I think the Visa multiple is less. Buybacks help. That, obviously when the amount of shares go down, even if your earnings stay stagnant, the EPS goes up when the amount of shares go down. So buybacks do help, and they are printing money, and these are fabulous companies. I just think the consumer is going to start getting hit and purchase less stuff in the future, like in 2024. And that's why Visa, MasterCard, they're not recession proof. So are these going bankrupt? Hell no. These are not banks. These are not any concerns here at all. They get rid of most of that risk, and they're just transaction processors, which is a fabulous business to be in. So love the businesses, love the stocks, don't love the environment that they're going into. I actually would have maybe Visa on my shopping list if we go into a serious recession in 2024. Maybe you get this thing down at the 170, 180 mark again. If that happens, a lot of ifs, but I'd have it on my shopping list, but my price would be a lot lower.
I would think it would have been to hold this one into the report after you saw the reaction to American Express. I mean, they are different companies, but still in the same space. Going back to Visa here, you have a clear area of support underneath here. It hit it 3 times, so who knows about the fourth time? That comes in right at the $228 area. We didn't quite get there in the pre-market, but fill a little gap and a couple low, one low in July, one low in September, one low in October. There's no such thing as a quadruple bottom, so we'll see what happens at that level today. Street leading, it was kind of mixed. That AXP kind of had people nervous. S&Ps here, kind of shrugging off the overall negativity here. I think that down 8 handles here at 42.63 and a quarter. I think not too bad. All things considered, here we're seeing some stocks trading in the red. Of course, the Microsoft is helping things out, and Google seems to be trying to steady here at the $132 area.
Quick
Again,
little
remember one thing, and people are saying, what about DFS? What about American Express? Discover and American Express
Totally
are much different companies than Visa and MasterCard because they don't issue the cards direct. Like my MasterCard is like a BMO MasterCard. So where the risk is taken on is with BMO, not with MasterCard. MasterCard and Visa are processing the transactions. American Express and Discover are keeping those transactions on their own books. So they're a bit different. So they have more risk. When the consumer, gets, tight, there's, more credit risk to Discover and to American Express. So those two companies are much different than Visa and MasterCard. Just keep that in mind. Those four stocks are not all the same.
Now, just a quick little technical lesson. And the only time I pay attention to head and shoulders is at the top of charts. That's the only times that it makes sense to trade that. Just like on the bottom side, it makes sense to trade kind of inverse head and shoulders, right? And so MasterCards, I mean, look how pretty this looks. This is as pretty as it gets for a head and shoulders, man.
It looks bad.
That looks ugly. And then
I
another
sold
thing
my
is,
MasterCard though. It was like 50 points ago, so I'm pretty disappointed. Actually, I think it was 350, so it wasn't. So it's 36 points ago. It was a bad sale. I mean, I
Yeah.
shouldn't have sold. I should have kept holding, I guess. So it's higher than it was now. So I'm still concerned that there's tougher times ahead, but that chart don't look pretty to me at all. But I've been bearish MasterCard for a while, so I've been wrong.
And the number one thing is when you go break that neckline, do you use it as resistance? And you can clearly see around that 388 level, it's starting to use it as resistance. So that tells me even more that shorts probably shorted the bounce right there. So I'll be looking to see if MasterCard can break the next level through the 380s on the downside today. Let's keep moving to Boeing. Q3 EPS here at a loss of $3.26, misses the loss of $2.96 estimate. Revenues of $18.1 billion, beat the $18.014 billion estimate. Boeing still expects to deliver 70 to 80 787s in Q3 and sees 375 to 400 337 airplane deliveries overall. Boeing reaffirmed guidance here with $4.5 billion to $6.5 billion of operating cash flows and sees $3 billion to $5 billion non-GAAP free cash flow.
Seller exhaustion here, probably more than anything. I mean, we went from 240 to 180 in just about 2.5 months.
Yeah.
In 2 months, we just lost 25% of its market value. I think it's not a great quarter at all. I think they talked about the 737, and I think the MAX, commentary here helped to a certain extent as well. Up 6, it just feels like you get to that 190, it feels like we got overhead supply, but the stock's massively oversold, along with a lot of other stocks. I mean, as much as I'm talking bearish overall, I also talked with, I believe it was Mish yesterday. There's a possibility that some of these stocks are actually already fully priced in a recession. I don't know if Boeing's one of them, but some
Boeing's
stocks
tough.
just
There's other things going on
murdered.
with Boeing. I mean, first of all, I'm sure the phone's not ringing off the hook from Delta or American Airlines or any of these other, LUV. I mean, that thing continues to go down.
The
So
airlines are
yeah,
just every day. They go
yeah,
down
Yeah,
every
man.
day. There's no
yeah.
relief. I mean, what
Yeah.
is the airlines telling us? I mean, there's a bigger conversation here.
I think
And
that's
instead of just
labor
worrying about
more.
Boeing, Mitch, like what are the airlines trying to tell us here? I mean, we went from
People
Delta
aren't flying.
saying it couldn't be any better 3 months ago. 3 months ago saying this is just amazing, like we're going to hit all our numbers. We're firing on all cylinders. He was saying everything on that CNBC interview. And the stock gave all of its run back from April and is now trying to break down to new lows. And full disclosure, I do have some of these banks. I have a couple of pairs trades on with Delta and LUV. So I'm just day trades. So I'm
It's
hedged.
incredible. Look
But
at
these are
JetBlue.
incredible sell-offs.
Look at
Oh,
JetBlue.
man.
You're down to 2008 pricing.
Oh,
2008. We're not talking 2020. We're talking 2008 for JetBlue.
we can say, oh yeah, the rise in oil prices is what did it here, but I mean, oil has stopped going up now, but the airlines are still going down.
That's
So
a good
there's something
catch.
else happening here, and you know what I think it is. I think it's global recession coming in 2024, getting priced in ahead of time, because you know what? You don't buy a new car when you're getting tight for cash, and you take less trips going forward. And I think the consumer is going to run out of cash in 2024, and I think the market is getting ahead of it.
With Boeing, just back to the technicals on that, I like the $190 area, as Dennis mentioned, because you had a gap down day and you had a low at 189.96, and then you revisited that area with a high right at 190. So it's tough when a stock has been pounded like this. You can give resistance, but if it clears 190, you're shorting at 190. Where do you go? Where do you go with this thing? Because there's nothing between Not much. One high at 195 and then the other high at 200. So important level there. If you happen to pick a bottom in the last 2 days, you're getting a little profit. Make sure you get a follow through 190 on the upside for Boeing.
See what happens there, man. It's ugly looking charts out there. Let's get to an interesting one here. Let's go to Thermo Fisher. In Q3, adjusted EPS $5.69 beats the $5.61 estimate. Sales of $10.57 billion missed the $10.59 billion estimate. They did lower their fiscal year 23 adjusted EPS guidance from 22.28 to 22.72, and now have brought it to 21.50. The estimate was 22.32. Lowering their fiscal year sales guidance from 43.4 and 44 billion now to 42.7 billion versus a 43.61 billion estimate. Thermo Fisher, overall, this space has been seeing a lot of downside action lately, especially healthcare overall.
It's rates. It's rates. They got 29 billion in debt. They operate on a lot of financing and a lot of debt. And that's this rates again. And the good news is the TLT, has bounced a little bit. We had the Ackman bounce. I am going to credit the bond traders. Absolutely hate it when I say it, but this was the Ackman bounce. It bottomed right in the same 5 minutes.
It did. Yeah.
Put a circle on it.
It was the Ackman bounce. And the Ackman bounce is still holding. We're backing and filling here a little bit, but so far, so good. That gives hope to some of these trades because long-term rates have got to stop going up, meaning the TLT has got to stop going down. And you know what? It's good. We've got a little bounce here. You hope you don't start making new lows on it again. But, all of these trades, it's something in common here. Why Boeing has been hit and Thermo Fisher. I mean, all these companies have a lot of debt. And we've talked on this show in the last month separating and saying, hey, look, the companies with a lot of debt are the ones that are getting hit the hardest. And it makes complete sense. For the first time in, I feel like, years, this market is trading logical. Like it's trading like it should. Companies with a lot of debt, when rates are going up, they're punishing them. Companies holding up well, like Microsoft, with very little debt, not affected by rates nearly as much. They have a lot of products that are not inelastic, but a lot more inelastic than, cars and airplane trips. I mean, it kind of makes sense that the Magnificent Seven has held up fairly well, yet, all these other stocks are just getting crushed.
Thermo Fisher is just support down at 85. No one's made a trade in it yet, so I'm not sure we covered it, but there it is. There's no
Sorry,
much
you got the
going
wrong
on.
stock up there, Joel. That's Thor. Thermo Fisher's
Thor-
is TMO.
TMO? Okay.
Yeah, TMO. Thermo Fisher.
TMO? Oh,
Yeah, I didn't
$400.
notice you had the
TMO.
wrong stock up
Yeah,
there.
yeah. What am
Thor
I
Industries
saying?
probably looks the same though, because that's
I
Winnipeg. Yeah,
know.
the charts look
All
the
these
same
charts-
anyways, because they got a lot of debt. So THO and TMO are the
I
same
think
right now.
an important chart to take a look at here
Lots of
is
debt.
the XLV, guys. Take a look how it's just barely hanging on to a very long sideways consolidation here. And if it breaks through those lows, it's not going to look pretty. So this has been what? How long has this been in sideways consolidation? About what now? 2.2 years?
2 years.
2.2 years. Gone pretty
Yeah.
much nowhere now. Doesn't look pretty there, especially the monthly. Look at the bottom right chart.
Yeah.
Just long consolidation. I mean, trading range XLV there. But you're right. It's sitting on some monthly support. We all know when things hang out in monthly support too long, they can't get away from it. Pressure on it, that's for sure.
All right, let's move towards Snapchat. Adjusted EPS 2 cents beats the loss of 4 cent estimate. Sales of 1.19 billion beat the 1.11 billion estimate. Snap's Q3 daily active users increased 12% year over year to 406 million. Snap announced a 500 million buyback program. Man, it just seems like every company chooses buybacks over just kind of increasing dividends or giving it back to shareholders.
Well, they're trying to grow the EPS number.
I really hate these buybacks, man. I'm sick of these buybacks, man. I just think it's just a financial engineering trick to try to make the stock look better but I would much
12
rather
bucks.
absorb the
How the
shareholder.
heck
It's
did
the
this go
financial
to
engineering to get
$12?
the EPS up, Mitch. So you're
Oh,
absolutely
too.
correct.
Yeah.
What algo, Joel? There's another point here too. What algorithm is running like on these? What are these news algorithms? Is there just a play? Like I've been saying, fade everything, and I had a pretty good night last night, just flat out fading everything. I'm like, moves were happening, and there was just stupidity. It felt like
12 bucks.
everywhere. Like it felt like everywhere. And this snap may have been nothing may have been
That could
dumber
be ridiculous.
than this
Yep.
snap to go up, because they made 2 cents. You taking the stock up 20% on that? I mean, yeah, maybe it's beaten up and maybe there's a short squeeze or something. I don't know what the short interest is on this, but holy cow, the news algo that just bought that up at $10, $50, $11, $12, just burning cash. I mean, I feel like these news algos are really dumb.
I mean, I'm just flabbergasted. I mean, what's just to give you a perspective on this, okay? So far for the month, it's had a range of $1.50.
The entire
month.
month. What was the
Yeah.
expected move
Oh,
on Snap?
50
Let's go
cents
look.
on it.
I'm just
I don't
curious
know. I
the
mean, it moves.
expected move. I
man.
guarantee you it wasn't $2.
I use
I'm going to
Option
look at the
AI for
expected
that.
So
just shout
again,
out to
the
my
way we
man.
do this, take you through the exercise. For those who are listening, go to the options chain, go to the weekly options so we can grab them October 27th. Look at the calls and the puts, and oh my gosh, what the hell are people doing? The expected move, Joel, you're not going to believe this. It was $1.80.
You're kidding me.
We just got to start writing options. There's reasons that, obviously a lot of our best traders we bring on this show are options traders here. CC, obviously, we bring on all the time. Who the hell is $1.80? I mean, the 950 puts were 80 cents and the 950 calls were $1. $1.80 was the expected move on this. Just burning money, option buyers. It's up 16 cents. The market makers could not be doing better on this one. These expected moves, that's insanity.
Crazy.
I wish I would have noticed that. I would have been so tempted to sell that straddle. What do you think? Somebody's going to come buy it out or something? 18%, more than that. It was $1.80 on 950 stock. It was a 20% expected move. So I guess the algo just brought up to the 20%, but we saw how long that lasted.
We know what happens.
So actually,
when
the
it gets
stupid money wasn't necessarily the algorithms. The stupid money was the people who were buying options on this thing. That's insane.
Let's see here. $10 is, I mean, it's been trying to get through 10. It's been the high recently. So if the bulls want to run with them, you get a 10 bid. Not a lot in the $10 handle. Next daily high, 10.29, and then over 10.50. But first things first, you got to establish a 10 bid, and now you're trading up 19 cents here. I look at a little bit. I mean, the chart looked okay going into it, like considering what the market's been doing, going from 8.50 to 10. So we'll see what happens. Closing price $9.71.
To Paul's point in the chat, I mean, you could be dead wrong and you still make money selling the options. Like you're writing, like you're sitting here. Yeah. I'm going to sit back here. I'm going to write some calls and boom, it's like, oh man, this is a bad report. And you see it going up and it comes right back in. Wow. I'm in the wrong business, man. I just need to start selling options.
What do you guys think about the Pinterest ascending triangle now? That's set up there because, of course, Pinterest will trade with Snap and didn't really move, but it's been hanging out here.
Stuck in the mud.
Elliot has it stuck.
Yep.
And it's not going up. It's not going down. They're waiting for whatever activist action for 2 years. I feel like it's been going on. Maybe I'm dating that wrong, but Elliot's been in there a long time. It's stuck in the mud. I think eventually it's going down just because it seems like everything eventually goes down if you wait long enough. Yes, that's what a bear market is all about, but Elliot's in there and Elliot's holding it up.
Let's move towards T-Mobile. And this is one of the charts that has surprised me the most. I was talking about this yesterday on Start Swing Trade. Probably one of the best investing stocks in the last 10 years.
Yeah, it is.
Q3 23 EPS $1.82 beats the $1.74 estimate. Revenues of $19.252 billion, missed the $19.32 billion estimate. Fiscal year 23 postpaid net customer additions at 5.7 to 5.9 million versus a 5.6 to 5.9 million prior. They do see fiscal year 23 merger synergies of $7.5 billion.
Pretty good report, pretty good numbers.
They just keep killing it.
Forward, you look at the PE current, you say 28 times, but I don't know if there's something. The forward expected PE is only 13. Just extrapolating $1.80 to, you can do a quick math, $7. So it seems a little higher than that. It seems like it's almost a 20 if you're extrapolating, but maybe this quarter, isn't as good as some of the other quarters. So, they've eaten AT&T and Verizon's lunch. There's just no doubt. So yeah. T-Mobile's been the best of breed here for a long time here now. AT&T and Verizon have all kinds of different issues. Yes, Verizon got the nice pop yesterday, but that Verizon
Big
pop is just
holy mackerel.
Seller exhaustion, Joel. I mean, the stock has been an absolute dog. So seller exhaustion pop on Verizon.
This stop where it should for now. We'll see if it can get back up here. The trading range here since May has been top of the range has been like 144 and change. It hit that in the pre-market, back under. Let's see what it does in the regular session. Support down at the top of yesterday's range at 141.31.
Let's take just a peek at Hess and Chevron's action from yesterday, of course. And then Hess reporting today, adjusted EPS at $1.64, beat the $1.17 estimate. Sales of $2.84 billion, beat the $2.37 billion estimate. What do you guys see on the action?
It's meaningless now, the earnings, which is, it's a good point to make though here. Obviously when a stock gets taken over, that's it. So it's been taken over. It's going to move with Chevron here now. So the earnings, which absolutely blew it away, if they weren't getting taken over, the stock would be up on it. But obviously all that matters now is Chevron's action. Chevron going down, Hess is going to go down. Do you have the ratio, Mitch? Do you remember what the ratio was? I never did write it down, but we should know those ratios.
I don't have the ratio right now.
Yeah, sorry, I threw you under the bus for that.
No worries.
Anyways, we'll hunt down the ratio here once again. That's how you trade Hess. It's just off Chevron.
And what about when I talked about the Chevron here and I talked about the deal and I'm like, why are they doing this deal? They must not be forecasting good things, for the company. And look at that thing, what it did since that. There's been no mercy. Now, the ExxonMobil, they did their deal. They went to support. They caught a nice bounce. Of course, that coincided with the the tensions in the Middle East here. But you got to be thinking here somewhere, trying to find the bottom in this thing, at least get some kind of relief pop, unless they just hate this deal so much. Couple lows are coming in at the $156 area, trading up 45 cents here. Yesterday's low was in this area. So Chevron bulls, 156, pretty big level here. Keep an eye on.
All right, in a second, we'll go to our guest. Looks like we're having a couple of camera issues there, so
sure.
We'll figure that out. Let's go Hilton. Q3 adjusted EPS $1.67, in line with $1.67 estimate. Total revenues of $2.673 billion, beat the $2.62 billion estimate. They do see Q4 adjusted EPS at $1.51 to $1.56 versus the $1.56 estimate, and sees fiscal year adjusted EPS to $6.04 and $6.09 on the high end versus a $6.07 estimate here.
Wow. I cannot believe these stocks have held up this well. You have the airlines in shambles, and, all of a sudden we just continue to think that everybody's going to go to hotels like they were before. I honestly, if I was long Hilton, I would sell it. I can't believe the stock hasn't been hit really at all.
154, you got to pop to. Unbelievable. I would sell that. I would sell it 3 days ago it was at this level. Boom. Now there's the monthlies. This 146 is just kind of sticking out to me. I know it's down $1.15, so it's not near that level. 4,000 shares have traded, but you lose. I keep an eye on 146. I just don't like the real estate here between 146 and really 136. Went up very quickly through that area. So the bulls, I'm looking for resistance too. You're trading down after report. 149.65 was your closing print from yesterday. I'm sure some people would like to see the mark on Hilton. I haven't looked at Marriott in a while. Boom, boom, boom. That's not far off its all-time high.
No, why?
No, I heard
why the forgiveness here? Money Mitch, do you have a reason? Like, why?
I mean, it definitely probably best of breed. But one thing that I would say about Marriott, I heard they really hit hard on their kind of rewards package. A lot of the people that have their top rewards are saying that they essentially halved their points. So I think that's a negative in the long run. Of course, a lot of these companies like Marriott and Hilton have really good rewards programs, and now it's seeming like a lot of people are dropping that off. But Marriott's been holding up here. I'm not going to lie. It has been holding up. It's best of breeds. Look at Hilton, also holding up, though. I thought this would have broke this trend line for a while now. I played it multiple times to that trend line. It still doesn't break.
Love the relative strength, but man, I would sell it anyways. Just, you know, so again, you're selling strength, which is never a good thing in this market. Like the MasterCard, Visa, Marriott, Hilton are all stocks that would get hit really hard in a recession. So some stocks are not pricing in a recession. These are definitely not pricing in a recession. So if you think you got a recession coming, I'd sell those stocks.
All right, guys, let's get to Teladoc here. Teladoc Health Q3 adjusted EPS.
That's still around?
Yeah, it's still around, man. At a loss of 35 cents, beats the loss of 37-cent estimate. Sales of 660.24 million, missed the 664.11 million estimate. They do see Q4 revenues at 658 million to 683 million versus a 686.56 million estimate, and also see fiscal year 23 revenues at 2.6 billion to 2.625 billion versus a 2.63 billion estimate.
I've hated the stock forever. I'm going to continue to hate it all the way down to single digits. Just my opinion.
Well, you could have said 18 was support yesterday. Now it's major resistance breaking down through there. All the lows, the stock was trying to be supported. Now those people are flushed. Pretty good volume on the sale too. So who knows? If you want to, I'll give you a potential, I don't know, 16.29 is where it got to. That was a little bit of an overshoot here right after the report came out. So that's your pre-market low. Definitely resistance much easier to define than support in this issue. That weak little rally that we had in the S&Ps there snuffed out and back down 15 handles despite Microsoft now over 345. So Microsoft can't save the market so far.
Microsoft is doing so much lifting today. Without Microsoft, this stock market would be down 40 handles right now. Yeah. So it's Microsoft holding up the market. TLT down $1 here now to Spinner's point. Thanks for keeping us up to date on that. I mean, obviously, I know I have a partial position in TLT. It's not been good. And I mean, I don't know. Rates, this is going to hit stocks again here today because we get the Ackman bounce. Now they're giving back $1 here. Everybody keeps watching rates, and bonds get hit, stocks get hit now. They're linked, and that linkage will eventually break, but not until we start to see rates rise.
All right, let's go ahead. Let's try. All right, guys, we're going to go ahead and try to bring on our guest. We're having a little bit of camera issues, so we're going audio only. Let's see what our guest has for us today.
Are joined by Greg Weldon. He's the CEO of Weldon Financial and editor of newsletters, Weldon's Money Monitor, Commodity and Currency Monitor, and Precious Metals. Greg, how you doing today?
What's up, guys? How you doing?
Good. Sorry we didn't do the test on that, but I like to bring floor people on. We'll save the floor story for the end here, but a lot of concerns in these markets, and let's just I don't know how to prioritize them. The big move in bonds that we've had, the yield curve, inflation. Where you at on all these things?
Well, we're all over the place, and this is why we have so much stuff to talk about. It gives us, a lot to, dissect through for sure. I think, of course, the first focus is always the Fed. You could say that, you have a chance to see a kind of a renewed push in inflation. And what I think is concerning to the bond market and more so to the Fed themselves would be if you did have energy prices go up on this geopolitical situation, which seems to me to be very likely in the future. That pushes the year-over-year rate because you have a base effect in energy right now, which would support higher inflation with any move higher in prices from here now on a month-to-month basis would feed through to the year-over-year rates. You see several food items which have had big declines and are now bottoming and starting to have better fundamentals even You have an El Nino too that's impacting crops around the world. So you have a lot going on that suggests the inflation risk does remain in the medium term to the upside. And let's say you got inflation back to 5.25. All right. Well, that would be a big deal, because if you look at where the Fed was in the beginning of the year, you had deeply negative real rates. So the Fed wasn't even close to neutral, let alone restrictive, which is where they wanted to get. It's only as recently as May that they've actually had a restrictive real policy rate. And this is based on all the Fed papers they put out in 2018 around R-star, which you probably heard about, which is defining neutral. And from there, you start to define how tight, how restrictive do we want to be? And the Fed had gotten to a point really only in May where they were restrictive. So everyone's saying, well, why hasn't the economy cracked yet? You have a lot, mortgage market certainly has crashed. Why is the economy still resilient? Well, I would offer that it's only resilient because you're only 5 months into restrictive monetary policy conditions. And from that perspective, it's a 12-month lag. Then the Fed starts to talk about lag. So let's say we don't even have the worst of the economy yet, which I say is a given. What if inflation goes back up to 5.25, which very well could happen?
Oh my
If
gosh.
that does happen, it eliminates the Fed's restrictive policy. And that's where you get the idea of a potential 7% Fed funds rate. Now, I don't think that's going to happen. I think market action and geopolitics are going to stand in the way of that. And I think that leads to another problem for the bond market, which would be if the Fed is seen acquiescing to higher inflation because of geopolitical or economic concerns. The bonds wouldn't like that, let alone you have a budget situation that's completely out of control. The latest numbers were mind-blowing.
You're not making me less bearish here, Greg. I come on and I'm like hoping that you're going to be, talking me off the ledge here. Now I want to go to 100% cash in my long-term portfolio. Tell us a reason, like why we, tell us the other, reasons why maybe, are any stocks pricing any of this in? Because I look at like the IWM sitting near 3-year lows. I mean, it looks to me like some stocks are pricing in a recession here. And again, we know when we look at the mega cap tech, Microsoft and this Magnificent Seven have held the market up very well here. But it's kind of like the tale of two markets here. Do you think eventually some of the small caps that price this in and maybe they can turn it around, or is it more like the Magnificent Seven could maybe start to get hit?
I think that the bulk of the market hasn't fully priced in what we're going to see down the road economically. I said way back in May, frankly, that you probably have a decline in inflation through the summer. You get it to 3%, and this causes a party. Maybe the stock market even goes to new highs, which it didn't, which is a sign unto itself of its inherent weakness. This is the most narrow rally, in through June, July. Then energy started to creep into the picture. All right. I think something significant's happened in the last week alone, where we do a quantitative portfolio for our institutional clients, and it's a playbook, we call it the portfolio playbook that we offer to individuals as well. And just even as recently as a week ago, we were looking at, being in energy, 33%, financial 17, industrials 15, infotech 22. Right now we're in, basically energy half, all right, communications, which has been really hot too, about 40%, and the rest is gold and Bitcoin. So when you look at the quantitative side, and then you look at the technical side, where the S&P 500, it's barely broken down. I mean, it's closer to new highs than it is even a longer-term breakdown pivot. Same with the NASDAQ, below 14,600, which you took out briefly yesterday. That's a major breakdown where you have scope technically, quantitatively, and I think even fundamentally, at least in terms of the macro monetary picture, down to 13,000, if not 11,000 in the NASDAQ. So I look at, the big tech has led the way. It's only now rolling over and starting to crack. The XLK just breaking down just now. Some things are broken down. Utilities, the real estate, certainly anything to do with the mortgage market has cracked. Staples have cracked, which is interesting. So now discretionary is following, healthcare is following, industrials are following. All the sectors are now rolling over, breaking down, threatening long-term moving averages. And in a lot of cases, the uptrend goes all the way back to the pandemic low, if not in some cases like utilities and staples, going back to the 2009 low. So I think this is a much bigger picture dynamic that we have coming at us. So, in the short term to medium term, for me, this is still about protection.
And how would you do it? What should the average investor do here at these levels? I mean, we've talked about, cash is a position, very attractive here with rates coming, with inflation coming down, your real rate of return has been much better. But in the new age investing portfolio playbook, is it just sit on hands here,
Yeah.
or is there anything else you're looking
No, it's absolutely not sit on hands, and that's part of the problem for the average investor, and that's why we started the playbook is actually an old product we used to have before the crash in 2008, and we revamped it because we're trying to help people. And this is a case where you have to be more active, you have to be more nimble, you have to be in things you haven't been in before. Currencies, commodities, bonds. The ETFs are a treasure trove of potential places to hide per se, but it's not about hiding, it's about still thriving and trying to keep up with the pace of debasement of the purchasing power of all paper currencies, including the dollar, is going to become increasingly difficult. That's the bottom line for me. Because when you're talking about trillions in deficits, when you're talking about gross interest payments in the last fiscal year with $909 billion, and any year before 2010, that's the largest single annual deficit. And now it's how much we're paying just to carry this debt. All right, these numbers are astronomical, and the problem is it becomes a mathematical conundrum where you can't keep printing enough money to keep the growth rates where they need to be to service the debt. So you also have that long-term fundamental issue as well. So in terms of where do you go, you have to start doing things like the dollar up ETF, or even, for risk capital, you can be looking at the SQQQ or the SH, which are the short bear equity funds ETFs. I'm not big fans of them. They could be a lot better than they are, and very rarely do I recommend them. But right now, I think there's a lot of risk in the stock market. You can also do things like being in gold. Now they have a Bitcoin ETF. You can be in the energy space. You can buy the crude oil ETF. You can even buy the gasoline ETF. Natural gas is probably bottomed. It's had a huge run to the downside. You're having, you got ample supply right now, but you're looking at, a polarized weather situation where you could have cold weather anywhere, and there's no margin for error in a lot of these commodities. So some of the commodities ETFs, certainly gold has been a place too. Yeah. So there are places, and that's why we offer a discretionary portfolio that is a complement to our sector breakdowns. And then we do the individual stocks too. But right now, I got to tell you, there's not a lot of stocks out there that are trending bullishly.
I love how you put it there, from sector to stocks is what I always look at. Now, one thing that I've been pointing to, and I just did a recent video on it, it was regional bank action and commercial real estate. What are you seeing in this situation? Of course, I've been pointing out how these banks just have extreme exposure, stems from 2008. And I think that, they just switched on, right? They went from residential to the commercial space because they had the ability to do so, and regulation wasn't as tight. Do you see the same issues, Greg?
Yeah, and there was demand certainly through the pandemic. A lot of warehousing and that kind of industrial commercial real estate was hot as well. I think that sector's kind of blown out of the water already. But the degree to which, when you look at these various sectors, the XLRE, the real estate just broke down just now. So a lot of even the interest sensitive stuff is still kind of catching up, because again, I think we've only been in restrictive monetary policy for not very long. But I still think that there's value in a lot of these other places where you're going to have to be involved in bond ETFs. The SHY, if you get a situation, look at the yield curve now. Okay. We talked about the yield curve uninverting and actually starting to steepen a couple months ago, and now it's happening. Why? Because the Fed would be facing this conundrum where, you look at the economy. When do you shift from we're fighting inflation to we're protecting the economy? We haven't gotten there yet because the economy is not that bad. The economy is not that bad because monetary policy hasn't really applied the vice grip pressure that is going to at some point in time if the Fed stays the course. So I think that, I look at this and I just see very few stocks. I'll give you an example. So we break it down by every stock in the S&P 500. I'll give you by sector right now. And we do bullish trends and bearish trends. And our rankings are based on the strength of those trends, not the performance, right? So in healthcare, 9 bullish stocks, 35 bearish stocks. This is out of the S&P 500. Industrial, 6 bullish, 41 bearish. Oh, wow. Infotech, 10 bullish, 40 bearish. Let me tell you, these are big reversals from 2 weeks ago. Real estate, 2 bullish, 14 bearish. Consumer discretionary, 4 bullish, 36 bearish. How about energy? 11 bullish, only 1 that is trending bearishly. So it's high time for commodities, which is interesting because the dollar's appreciating. And you have a situation, we get so U.S. centric here, right? That the U.S. stock market is the be all and end all of everything. And when you look at what's going on in Asia, take a place like Singapore, 100% of their revenue, domestic income, GDP comes from exports. Their exports are down year over year, 12 months in a row. All right. Take a place like Indonesia. 6 out of the last 7 months, double-digit declines in their exports. All right. Now, in Indonesia, inflation has fallen from 8% to 2%. It's only 2%, which is the lower end of the Indonesian central bank's target range, right? What they do this week, they raised their interest rate to 6%. So now they have a punitively restrictive real policy rate. And why did they do that? Understanding the economy's kind of crashing. They did it to protect the currency because the currency is declining against the dollar. And they're worried about imported inflation when maybe the narrative shifts to we let the currency go to help exports and to help the economy. And so I think that places like that are interesting to watch. They're going to give you a tell and a lead time on things that are going to happen in other countries, potentially even the U.S. eventually, because, eventually the dollar is going to have to come into play as a monetary tool on the other side.
All right, I'm going to come out from under my desk here and wrap up this interview here with Greg Weldon, the CEO of
A lot of
Weldon,
positive opportunities out there.
Weldon Financial, man. This guy, yeah. Well, no, we're going to get you back on again soon. I didn't get a chance to get to any floor stories. We're going to do that next time, Greg.
Yep.
Thanks a lot.
Yep.
Doing a lot of hard work. We appreciate
Yep.
your input here on Premarket Prep. We'll dial you up again real soon.
Sure, my pleasure, guys. Thanks.
All I got to say is he said that all guys with a smile on his face. Do you see that? I mean, it's incredible sometimes, man.
Wow.
All right, let's get back to the markets.
That was not comforting. There was
Dennis,
nothing more that made me less bearish.
Dennis literally hit under his desk. I saw
Dennis
it.
I was literally, I couldn't even interview on the back half of that because I was too busy selling stocks. It's a joke, but holy man.
Oh, man.
That's where we're at, though. I think he's right. There's
Big
a lot
bad
of things
wolf,
to worry
man.
about here and a lot of reasons not to be buying dips.
And it's a tough environment out there. I mean, where's the positive come in, right? I think we're all expecting the pause now in November. But from there, we'll all be on a wait and see of when the hell do we get a pivot? And how tough will the environment have to get for the Fed to switch from inflation focused to the economy focused, right? Where they're like, well, we got to come in here and step in, even though if inflation doesn't get to 2%, because that's what their focus is right now.
I don't know. Like, there's so many different things to worry about here, and some of it, maybe priced in. The bonds are pricing in major issues here. They're pricing in obviously rates for a long time. Higher rates for a long time is what they're pricing in here. So I don't think like we can even keep thinking about pivot. I'll tell you, the only reason we're going to get a serious Fed pivot is if we do go into a serious recession in 2024. And then there's the real risk, and we haven't posed this question. I mean, there's the real risk that the Fed might not be able to pull us out of the tailspin instantaneously here. They've lost the long end. So even if they start lowering rates, it's like, can they pull us out of the tailspin if we go into a serious recession? Because these rates, it's come to roost here. Like, it's coming. Like, these people, a lot of people are now struggling to probably find the cash to make their ends meet. And I mean, rates is hurting. Like, I had some other friends talking over and saying, why is the Bank of Canada continuing to raise rates here? Like one friend lost their job, but I mean, it's just not as good as it was 6 months ago. So there is the argument. I believe they should stop raising rates now. I truly believe that they should stop right now. There's no reason to pivot at this point in time, but worrying about getting us down to the 2% inflation, the risk now is that you've done too much damage from higher rates, that it's going to take a while to undo some of this damage, and it's coming. The stocks are telling you. Like, it's what, to Greg's point, making so many good points there. Take your Magnificent Seven blinders off here. We've been annihilated in a lot of stocks. I mean, some stocks just go down every day. Airlines down 40% last quarter. Stocks that, were very, much, loved, like, by the street. Like, even the casino stocks, looking at those here. Wynn Resorts is now 20% off of the highs here. MGM now $50 is now $36.
Penn never coming back.
There's some serious selling here going on. Caesars was 60 down to 40. I mean, there's so much carnage in a lot of different areas here that we don't even talk about every day. So part of me thinks, like, if we don't go into recession, we should probably be buying stocks right now because some of them are pricing in a recession.
Did bring someone made a good point that that's Ryan Dietrich's evil twin. I think it would be
Ryan Dietrich did not love that interview.
No, he was
I
not a
hope he
fan.
didn't see it because he might not want to come on our show anymore. But
We love Ryan
anyways,
Dietrich, and you know what? Ryan does a lot of good things
Hey,
here.
you got to be
and
on. You got
Ryan's
to show
been
both sides
Ryan's
of the
been
coin.
right a long time, and Ryan is still bullish here. So we've guessed when Ryan throws in the towel, then I'm really going to start getting scared.
After that, I mean,
Because Ryan's been bullish a long time, and he's been right. I mean, he's been obviously right in the last 9 months or 6 months, the first half of this year. So, I don't know.
Boy.
Yeah,
Okay,
he's been pointing to
I'm
seasonality.
going to wrap
here,
things up
so.
here. Today we had a little rally. We gave it back. We're $10 off the pre-market low. I think there's a number in here, folks, that the below that yesterday's low. I mean, you had a higher low from yesterday. I think the Bulls really have to defend that low from today. We'll see if it happens. It's going to need more help than Microsoft. But the earnings parade will continue, and we'll bring on Mr. Chaikin tomorrow to see what his perspectives are on the market. So fun show, you guys. I got a new guest that definitely is giving us some good insight into the market. So back with you guys later on.
All right, Joel. Like always, it's great to have you. Of course, you guys can keep up with Joel at Spoos and Dennis Dick, Triple D Trader. You ready to get after it, man?
Yeah, just trading cautiously, fading lots of moves here. I mean, we can go on full bearish here, but let's give some perspective quickly. IWM, we're at major support in the IWM. If there was a area to bounce, we're back near the October lows here right now. This 162 to 165 area is major support. So draw a hard line. Remember Disney? We had Disney, saying a lot of things not going right there and still not going right, but it's held that 80 support. It's not going to be easy sledding for the Bears. As much as we've had a pretty bearish show here, and we've been bearish for a while, it's not easy sledding for the Bears here in the next week or two, I don't think. So I don't know if I'm coming in necessarily and just saying, sell it all, we're going to zero. I think we continue to chop around here for a while. I think the real pain is going to come in 2024. I'm with you, Money Mitch. And I think we're oversold on a lot of stocks. I'm hoping for a healthy bounce maybe out of here to actually lighten up stocks into 2024. So I'm hoping for better times in the short term here. I'd actually look, at opportunities at stocks on support here with my trading hat on. I kind of like the IWM support level here at 162 to 165.
Yeah, we never really got out of this kind of bearish, you can say it like a descending triangle, ascending triangle. We never really got out of that. We got to the 200 resistance and then just turned right back around. So let's see if we turn back around off the support, Dennis. You're always looking for the turns. Let's see if we get a turn, right? And like always, he's not saying that it is happening, but maybe look out for it, right? And I think that that's more important than actually seeing it, right? Let's see what happens today to see if we can stay in a little bit of a bouncing tune, because lately it seems like we are getting a little bit of an up move. Can the SPY close green today? That'd be impressive, right?
There's a lot of good things. Like the Microsoft report is great news. Microsoft up 15 points is great news. Can this market take its blinders off and not look at Google for a minute and maybe look at Microsoft here? I mean, I'm very surprised. The reason that S&P has rolled over here, though, is the TLT. There's no doubt. We were this morning. Last night we were flat on the TLT. We've rolled over here, so it's taken the IWM with it now. And the IWM doesn't give a crap about Microsoft because it's not in there. So that is the real carnage here today. S&Ps are trying to hold up. Google's not going down. Google's been holding up okay. Microsoft is lifting. I mean, Microsoft's going up more. It's up 16 here now. So it's definitely rates the issue here. Once again, we need the TLT to stabilize, and then this market can try to think about rallying.
All right, guys, if you guys haven't checked out my video, throwing it up one more time so you guys can check out, of course, the video on the regional banks. Always good to have you, Dennis. We'll see you back tomorrow, my friend. All right, like always, you guys can stick right here to get to some more action. Of course, we got live trading coming up next, so don't go anywhere, team. And let me know what you guys thought of that video, right? Come over to live trading. We will talk about it. We'll expand on it. And if you guys haven't checked it out, of course, there's the link. Hit that and then come over to live trading. It's only 13 minutes long, so tell me what you guys think. I got a lot of great feedback, tons of comments. So if you guys didn't see it, go ahead and check it out. See you next time right here, of course, on Pre-Market Prep.
Bye.